Hi, Andrew Pape here for Corporate Finance, MBA 830, Concordia University of Wisconsin. Today I'll demonstrate my valuation of Freeport McMoRan Inc., a company in the sector of basic materials and under the industry of metals and mining. Freeport McMoRan is the largest publicly offered producer of copper. The company's market capitalization is about $20 billion, and I will be using the discounted cash flow model to demonstrate how I arrive at the valuation. I use financial figures from ycharts.com, valueline.com, and also the company's financial sheets in my valuation. Let's begin. So I start with the risk-free rate, which is 2.2%. I got that by looking at a 10-year U.S. Treasury bond rate. Next is the market risk premium, which I put at 19.23%, and I got that by going to ycharts.com and looking up the CAPM expected return, which is 21.43, and I subtracted the risk-free rate, which brought me to the 19.23%. Next was the beta, which I also got from ycharts.com. I took the 1-year beta, 2.29. Which then brings the cost of equity up to 46.24%. And that's just a formula that was previously plugged in there. The market value of equity is just the market capitalization. I took the market price per share times the shares outstanding. Came to that number. The pre-tax cost of debt I got from the company's income statement under the interest expense, which is $755 million, and I divided that by the total amount of debt, which I added, for that figure, I added the long-term debt less the current portion plus the current portion of debt, which brought me to $16 billion and $27 million. And then I did that $755 million divided by that to get the 4.7% pre-tax cost of debt. The effective tax rate I got from valueline.com from the published PDF report from June of 2017, and that was 30%. Which brings the after-tax cost of debt to 3.29%. Next is the initial cash flow. And I got that also from the Value Line report from June. And I took the cash flow per share for $4.45 and multiplied that by the shares outstanding. And I got a very generous number of $6,452,000,000 for the initial cash flow. The long-term growth rate I put at the average GDP rate just because Freeport is a pretty volatile company, so it's pretty tough to estimate a growth rate beyond 5 years. The short-term growth rate I took from the Value Line report and looked at the cash flow growth rate of 10.5%. I plug that in there, and that should populate all the next years. of free cash flow. And it comes to the intrinsic value of $13.19, which means the stock as of now is currently overpriced. And in support of my valuation is a valuation listed at ycharts.com. And they valued this stock at $11.42 using the price per sales method of valuation. If we wanted to lower the initial cash flow, we could try that. Another figure I played with was $5,500,000,000. And once again, it's overvalued again. The only thing that really makes this company overvalued is if you change the risk rate to something more reasonable and the value blows up. So this company is going to have to do something to appear less risky. Otherwise, it's not that great of an investment. This was Andrew Pape for Corporate Finance, MBA 830, Concordia University of Wisconsin. And that was my valuation of Freeport McMoRan Inc. Thank you.